payments industry moves fast. The economics behind it move even faster. Welcome to On the Wire, a show about the economics of payments, the institutions moving money, and the infrastructure underneath it all. This episode is produced by Payware using AI voice synthesis, built from primary research, technical documentation, and real market data. No studio, no hosts, just the content, clearly presented. Let's get into it.
So the next time you pull up to a drive-thru and, your coffee's already paid for before you even roll down the window.
Like, it feels like actual magic.
Right. You just tap your phone, grab your latte, and drive away. You think you're experiencing like the absolute cutting edge of banking tech.
Which, you are, but not in the way you'd think.
Exactly. Because behind that screen, there is this massive multi-million-dollar invisible war going on.
It's a massive tug of war.
Yeah, between government regulators who are trying to set these basic rules and private tech innovators who are just trying to build the future.
It's totally fascinating because the battlefield here is the underlying plumbing of, what the industry calls account-to-account payments, or A2A.
Right, A2A.
So what feels like this simple, frictionless, 1-second interaction for you sitting in your car, that is actually the output of some highly complex infrastructural decisions.
Decisions made by banks, payment networks, all these merchants, and we are diving deep into those specific decisions today.
Yeah, we've got a great stack of notes today.
We really do. Our source material is a technical document from Payware, and it's called Direct Integration Standards versus Open Banking.
Good title. Straight to the point.
Yeah, and our mission for this deep dive is to basically unpack this huge fundamental choice that payment institutions are facing right now.
Which is, do you go with direct integration or do you stick with open banking?
Exactly. And we're going to look at how that choice totally dictates what you and I can actually, do as consumers at the checkout.
And why the really smart payment networks out there are kind of blending both of these into what they call a hybrid model.
Okay, let's unpack this, because I think most people, if they follow fintech at all, they hear the phrase open banking and they instantly assume, oh, that's the modern superior solution.
Right, because the word open sounds so progressive.
Exactly. It sounds like the internet, right? Free and open. And conversely, they hear direct integration and assume it's this clunky, custom legacy nightmare.
Like every bank having its own weird wiring in the basement or something.
Yeah. But looking through this Payware document, those assumptions are, they're completely backward.
They really are, yeah. To understand why your payment experience varies so wildly from like clunky web redirects on one site to that seamless drive-through magic.
We have to look at the architecture.
Right. We have to understand the two very distinct architectural philosophies here.
Right.
And the best place to start is with the baseline, which is open banking.
Right. Because the document makes a massive point of calling open banking a regulatory mandate.
It is entirely compliance-driven.
So the banks didn't just wake up one morning and decide to build this, out of the goodness of their hearts for the consumer.
Definitely not. Think of PSD2 in Europe, the Second Payment Services Directive. Regulators basically stepped in and said, look, we need to foster competition.
Because the traditional banks were holding all the cards.
Exactly. So the government legally forced all banks to provide these standardized APIs, application programming interfaces, to allow third-party access.
Okay, so an API is basically like a digital doorway, right? That the government mandated every bank has to build.
That's a really solid way to visualize it, yeah.
And it lets outside companies knock and ask for access to a customer's account, provided I say it's okay, obviously.
Right. And to use those doorways, an outside company has to go register as what's called a licensed PISP.
PISP. What does that stand for again?
Payment Initiation Service Provider.
Okay, got it.
So this PISP acts as your digital courier. Yeah. You give them permission, and they run the digital errand to your bank's API to initiate the payment.
But the friction, like the annoying part for the user, happens in how that bank actually verifies the courier.
Right, yes. That is the core issue.
Because I've used things powered by open banking, and it always, without fail, kicks me out of whatever app I'm using and opens up a web browser to my bank's login page.
Right, and there is a deep structural reason for that. Because open banking is a regulatory minimum, it relies super heavily on broad security protocols.
Because it's a one-size-fits-all thing.
Exactly. When the PISP sends a request to the bank's API, the bank doesn't inherently trust that third-party app to handle your actual secure credentials.
Oh, sure. They don't know who this app is, really.
Right. The bank's security architecture essentially demands that you authenticate directly with them on their turf. So they force a web redirect.
So your phone switches to this sandbox browser. You log into the bank's webpage.
You authenticate the payment, and then, and only then, the bank settles the transaction and redirects you back to the merchant's app.
It's so safe, but it is just incredibly clunky. The analogy I kept thinking of when reading this was municipal building codes.
Oh, I like that. How so?
Like, open banking is basically the building code. The local government mandates the minimum requirements for a house to be legally habitable.
Right. You need fire exits. The plumbing has to work.
The electrical panel can't spark, exactly. It guarantees a baseline of safe functionality everywhere. But the building code is not going to build you a state-of-the-art custom smart home with, like, voice-activated lights.
No, of course not. And that analogy holds up perfectly. Open banking is the compliance baseline, not the innovation ceiling.
Right.
It's designed for fixed feature sets, mostly just standard payment links or basic web checkout flows. And this is where we really have to contrast it with direct integration standards.
So if open banking is the building code, direct integration is the cutting-edge architect building the smart home.
Exactly. Direct integration isn't mandated by anyone. It's completely voluntary.
Okay, let's define this innovator side. What is it mechanically?
Well, a direct integration standard is a comprehensive proprietary payment protocol designed by a specific payment network.
And the payware document is obviously outlining their own standard here.
Right. Payware is a prime example. Banks voluntarily choose to adopt this specific protocol and run it alongside their mandated open banking APIs.
Okay, but I'm looking at the numbers from our notes, and I have to push back here, because this makes no logical sense on the surface.
Let's hear it.
The document states that for a bank to actually implement a direct integration standard, it costs them somewhere between 40,000 and 100,000 euros.
Yeah.
And it takes 2 to 4 months of dedicated engineering work.
Sure.
Why on earth would a bank CFO approve a massive budget and tie up their engineering team to build a second doorway when the regulators already forced them to build the open banking doorway for free?
Well, not for free, but it's a sunk cost.
Right. They already had to build it, so why build another one?
It all comes down to competitive differentiation and avoiding becoming just a commodity.
The commodity.
Yeah. Think about the reality of the market right now. If every single bank in Europe offers the exact same baseline, clunky web redirect payment link, how does a forward-thinking bank stand out to massive retail merchants?
They don't. A baseline payment link from Bank A looks identically clunky compared to a link from Bank B.
Exactly. Which means the banks are just interchangeable utilities at that point.
Yeah.
So forward-thinking banks invest that $100,000 in direct integration for the enriched data and the premium capabilities.
Okay, so what are they actually getting for that money?
First, direct integration removes the intermediary layer completely. The payment requests route directly from the payment network to the bank.
Like a private pipe?
Yes. Because the bank and the network built this dedicated pipe together, they have pre-established cryptographic trust.
Oh, which means no web browser redirect.
None. The protocol is designed for app-to-app optimized flows. Your banking app opens instantly, natively, bypassing the browser entirely.
That alone is huge for user experience.
It is, but the real return on investment is that direct integration enables all 7 payment initiation methods.
Right. The source lists these out, and it's quite a spectrum. It supports QR codes, NFC contactless, payment links, SMS.
Barcodes, yeah.
But then it gets into things like BLE proximity, which is Bluetooth low energy, and even like soundbite audio triggers.
Yeah.
Open banking simply doesn't have the architectural vocabulary to even understand a Bluetooth ping, right?
No, it doesn't. Think of direct integration like SMTP for email.
Okay, SMTP.
The Simple Mail Transfer Protocol. It's this universal industry standard that lets a Gmail user send an email with a massive PDF attachment to an Outlook user seamlessly.
Because it's a rich protocol designed to handle complex stuff.
Exactly. Open banking, in this context, is like the government saying, look, you must provide a way to send a plain text message.
You get the message across, but you aren't sending high-res photos.
Right, you're just doing the bare minimum.
Knowing the mechanical difference here is crucial, obviously. But the actual impact of this invisible war is felt at the checkout line.
where the rubber meets the road.
Right. And the source document breaks down how the technology a merchant chooses depends entirely on their specific scale.
They're totally different for different merchants.
It's a complete showdown. You've got the technical needs of a small basics merchant versus the demands of large retail payment networks.
You really see the divergence when you look at those profiles. Like, let's take a small e-commerce site, or maybe a brand new fintech startup just testing the waters with A2A payments.
For them, the mandate is all they need.
100%. They should rely solely on open banking. Their technical needs are incredibly utilitarian. They just need a simple pay with bank link on their site.
Right.
They need immediate, comprehensive bank coverage right out of the gate so they don't lose sales from customers using obscure local banks.
And they need low setup costs. I think the note said getting a PISP license only costs between 20 and 50,000 euros.
Right, 20 to 50,000. It's a relatively low barrier to entry that plugs them into every single mandated bank API instantly.
Because they aren't trying to build a frictionless sci-fi drive-through experience. They just want to sell, I don't know, hand-poured candles online without paying massive credit card fees.
Exactly. And open banking serves that specific need perfectly. But contrast that small candle shop with a large retailer or a payment institution serving massive physical verticals.
Like quick service restaurants or live event venues.
Right. Stadium ticketing, places with massive crowds, they literally cannot survive on the building code minimums. They absolutely require direct integration to process those high-volume ambient payments.
Let's get into the mechanics of those ambient payments, because the how is just fascinating to me. Let's revisit that drive-through scenario from the intro.
Yeah, let's break it down.
Walk me through the actual plumbing happening in the air and in the code when my car pulls up.
Okay, so with the direct integration standard, the restaurant installs a Bluetooth Low Energy, or BLE, beacon right at the drive-through lane.
Okay.
It's basically constantly broadcasting a tiny packet of data, a unique identifier using very little power. As your car pulls up, your phone's operating system detects that specific beacon in the background.
Oh, wow.
And because your bank has implemented the direct standard, the network recognizes the proximity, and a secure notification just pops up on your lock screen.
So wait, I haven't opened an app. I haven't scanned a QR code.
Yep.
The physical space just talked to my phone.
The physical space initiated an invisible handshake. So you tap the notification, you review your coffee order on the screen, authenticate with Face ID or your fingerprint, and the payment settles instantly.
And by instantly. Well, the document specifically mentions SEPA Instant here.
Yes.
I want to pause on SEPA Instant because as a consumer, when I swipe a regular credit card, the little machine says approved in 2 seconds. It feels instant to me. How is this actually different?
Oh, it's vastly different. When you swipe a credit card, that approved message is literally just an authorization. It's an IOU.
It's a promise to pay later.
Right. The merchant doesn't actually see that cash in their bank account for another 2 to 3 days. And they pay a massive fee for the privilege of that IOU.
Yeah, those interchange fees are brutal.
But SEPA Instant, which stands for Single Euro Payments Area Instant Credit Transfer, it moves the actual hard currency from your bank account to the merchant's bank account in less than 10 seconds. It is final, irrevocable settlement. The merchant literally has the cash before you've even pulled forward to the pickup window.
That is wild. And open banking cannot facilitate that Bluetooth handshake at all.
Structurally impossible. BLE proximity is simply not in the regulatory open banking specification.
So how would it work with open banking?
To do a drive-through payment using open banking, the restaurant would have to text you a URL. You'd have to tap it while sitting in your car, wait for the web browser redirect, log into your bank's portal, authorize the payment.
Well, people honking behind you would be losing their absolute minds.
Yeah. It defeats the entire purpose of a fast ambient experience.
And it's the exact same mechanical limitation with the live event scenario and the payware document details. They outline this amazing use case involving media-triggered payments via audio sound bites.
That is honestly one of the most advanced applications of direct integration I've seen.
Explain how data is actually embedded in audio, because that straight up sounds like science fiction.
I know it does. So it relies on high-frequency sound waves. During a live concert, the venue's speakers broadcast an audio signal at a frequency that the human ear cannot catch.
But a smartphone's microphone can.
Easily. It can detect it perfectly. And embedded within that inaudible frequency is a unique data payload, essentially a digital trigger.
Okay.
Your phone's microphone picks up the signal, decodes the payload, and instantly opens your banking app with a pre-populated request to, say, buy the band's exclusive merchandise.
You just look at your phone, Face ID authorizes it, and you've bought a t-shirt without ever scanning a QR code or typing in a web address.
Exactly. And again, open banking completely fails here. It requires manual intervention. It requires those web redirects. It has no idea how to interpret a high-frequency audio payload.
It just wasn't designed for ambient media triggers.
No. But, to be fair to the source material, there is a middle ground they point out where both architectures perform pretty similarly.
Oh, right, for basic recurring payments?
Yeah. Say you have a €49 monthly software subscription. Once you set up that initial mandate, both architectures handle the recurring automated billing equivalently in the background.
Okay, sure.
And for a one-off online purchase, open banking has that redirect friction we discussed, whereas direct integration opens the app natively, but functionally, they both get the job done.
Right. So if you are a small online merchant, open banking is your utilitarian workhorse.
Yep.
But if you are a massive retailer trying to create frictionless physical experiences, direct integration is really your only path forward.
Without a doubt.
Which creates a massive architectural dilemma, doesn't it? The coverage gap.
It is the central problem of the entire industry right now. Direct integration is clearly the innovator doing all the really cool advanced work.
But because banks have to voluntarily opt in and spend that $100,000,
it currently only covers about 10 to 15 strategic megabanks. Now, those are massive institutions, so that actually accounts for 60 to 75% of total transaction volume.
But it's not universal.
It's not.
Meanwhile, open banking is basic and clunky, but because the government mandated it, it covers 100% of banks.
Even the tiniest local credit union has an open banking API.
So if you are a payment network, you face a huge hurdle. How do you offer the magic of BLE and audio triggers to massive retailers without losing the ability to process a payment from a customer who uses a small regional bank?
You solve it through what they call a hybrid approach.
Okay, let's dig into that.
Payment networks like Payware realize they cannot survive by choosing one or the other. They benefit massively by operating as what they call a transaction resolution network.
A transaction resolution network.
Yeah, they essentially build an incredibly fast routing engine that utilizes both architectures intelligently in the background.
Let's walk through the millisecond mechanics of that routing engine. Say I'm standing at a register, I've scanned a QR code or got a BLE ping, and I want to pay. What is that hybrid engine actually doing?
Think of the hybrid engine like an incredibly fast air traffic controller. When you initiate the payment, the network scans your passport, which is your unique bank identifier.
Okay.
And that happens in a fraction of a millisecond. The engine then makes a real-time routing decision based on the specific capabilities of your bank.
So if my bank is one of those 15 mega banks that spent the money on the direct integration protocol,
the air traffic controller instantly routes your request down the direct channel. You get the VIP runway, the app opens natively bypassing the browser, and you get the rich, optimized experience.
But if the engine scans my identifier and sees I'm using, a small local credit union that only has the regulatory minimums,
the controller seamlessly routes your payment down the commercial runway, the mandated open banking API.
Got it.
You'll get a basic payment link method. It will kick you over to a browser to authenticate, introducing a bit more friction, but the payment still processes and settles.
So the transaction isn't rejected?
Exactly. It's just resolved using the best available method for that specific institution.
Our notes have a brilliant analogy for this using the airline industry.
Oh, I love this one.
Yeah. If you fly frequently, you know about direct partnerships and code shares between major airlines. If you fly a direct partner airline, you get seamless baggage transfers, priority boarding, you get access to the VIP lounge.
That's direct integration.
Right. But airlines also have these basic interline agreements with almost every other carrier on Earth. You don't get the VIP lounge, you might have to recheck your bag, but that basic connectivity ensures you can buy a single ticket to get from New York to a tiny remote airport in the mountains.
And that's open banking. The hybrid model basically gives networks and massive retailers the premium depth where transaction volume is highest and the basic breadth to cover the rest of the map.
It ensures no customer is ever turned away.
Exactly.
But what does this mean for the consumer's cognitive load? Does the customer standing at the drive-thru have to actively choose which network or runway to use?
Not at all. Yeah, and that's the beauty of the hybrid routing engine. It is entirely invisible to the consumer.
They just pay.
The customer just interacts with whatever payment method is presented to them. And for the merchant, the benefit is massive. They get 100% universal bank coverage through the open banking fallback.
Right.
But they also get to offer those incredibly fast ambient experiences to the 75% of people using major banks via direct integration.
And for the payment network itself, operating as a hybrid means they can just keep evolving their premium standard, right?
Totally. They can invent new ways to pay, like embedding data in audio waves without having to wait 2 to 5 years for a European regulatory committee to update the open banking laws.
They just push the technical update to their direct protocol partners and launch it immediately.
Speed of innovation is the ultimate currency here.
Uh,
Regulators are inherently slow because they have to build secure consensus across entire continents.
yeah.
Innovators building direct standards, they move at the speed of software.
We have covered a massive amount of technical ground today, so let's pull this all together for you listening right now.
Yeah, let's recap.
The big takeaway here is that the payment infrastructure world is not a monolith. It is a highly layered ecosystem.
Exactly.
And next time you experience an incredibly smooth ambient payment, whether you're tapping to buy a concert ticket triggered by an invisible sound frequency, or you're just breezing through a drive-through as your phone handshakes with the beacon, you will know exactly what is happening mechanically.
You'll see the matrix a bit.
Yeah. You'll know that you aren't just experiencing standard regulatory compliance, you are experiencing a direct integration standard.
You can recognize that invisible architectural war.
And you'll know that the tech innovator won that specific battle to make your transaction feel like magic.
Understanding the plumbing really does change how you look at the checkout counter.
It really does. But I want to leave you with a final thought to chew on. Something mentioned briefly in the payware document regarding the future.
Oh, regarding PSD3.
Exactly. We talked a lot about PSD2, the current open banking regulation, but PSD3 is actively being drafted.
It is.
Eventually, regulators are going to update the open banking baseline to mandate some of the innovations we are seeing today.
But that's how it always goes. The innovators build it, the regulators eventually mandate it.
So if the definition of a basic, legally mandated payment eventually includes things like drive-through ambient BLE payments,
Yep.
what unimaginable sci-fi ways to pay will direct integration innovators have to invent next just to stay ahead of the curve?
It's a crazy thought.
If your phone silently talking to a drive-through beacon feels like magic today, what is the payment magic of tomorrow going to look like?
Well, when the ceiling becomes the floor, the architects just have to build higher.
Exactly. Until next time, keep looking behind the screen.
That's On the Wire, produced by Payware, the transaction resolution network for instant A2A payments. This episode was AI generated from Payware's published research and documentation. If something sparked a question, the full source material is available at payware.eu. If you work in payments at a bank, an ISV, or a merchant organization, and what you heard is relevant to what you're building, reach out. The conversation doesn't have to stop here. Subscribe to On the Wire wherever you listen to podcasts. The next episode is already waiting.